Assalamualaikum. Welcome to lecture 9 of financial reporting, IAS 23 borrowing cost. So, this is a short lecture and it's going to focus on the accounting for the interest cost, arguments for and against capitalizing the interest. Scope of IAS 23. This goes in line with your IAS 16, my previous lecture 8. Okay, because this will account for the non-current asset. Definition of borrowing cost. Then the accounting treatment, where we recognize the borrowing cost, disclosure of capitalized borrowing cost. Then under capitalization issues, we'll see what are the qualifying assets, the borrowing costs that are eligible for capitalization, commencement of capitalization, suspension of capitalization, and when you cease capitalization. And finally, we are going to conclude with syllabus summary technical articles. So, starting with the main objective of this whole lecture is to describe the accounting treatment of borrowing cost. Okay, so basically, which borrowing cost can be capitalized as a part of non-current asset? That is the main objective of this lecture. Already you have gone through IAS 16, my previous lecture, where we have capitalized the non-current asset, all the direct cost, the cost. Here, this is the continuation of it. This is going to cover those costs, okay, when we borrow to construct a non-current asset, whether we can capitalize the borrowing cost as well as the interest relating to that borrowing amount. So, and IAS 23, the accounting treatment and capitalization issues. These are the three areas. Now, accounting for the interest cost. Companies borrow to finance their activity. Okay. So, when they borrow, they pay interest, also known as finance cost, on the amounts borrowed. How could such debit for interest be recognized in a financial statement? Always as an expense, or are there circumstances which could justify the capitalization as an asset? Can we capitalize it as a part of an asset, or is it always expense? It's a question. Capitalizing an asset as an asset defers your recognition of the expense in profit and loss to a later period. When you're capitalizing it as an asset, of course you are going to recognize it as an expense in the profit and loss, but for the later period it will defer it. Immediately you will not recognize. So now we'll go through the arguments for and against capitalizing interest. Arguments for means for capitalizing interest. It's good if we capitalize the interest because it's going by accrual basis. That means where we are matching the cost, that is the interest, with the benefit. When we are using the asset, we are getting the benefit. We have to match the cost also against that benefit, which is the interest. So in this case, it makes sense. Yes, we'll capitalize the interest as a part of an asset. Next, it improves comparability. Okay, so you can compare between companies which buy assets and those which construct. Consistency. Interest is treated as any other cost. And on the other hand, we have arguments against. So under accrual basis, benefit is the use of money. Therefore, interest should be recognized in profit and loss in which company has use of the cash. That means they are saying when you're using the cash, okay, so you recognize the interest as an expense in profit and loss rather than capitalizing it. Next, comparability is distorted because similar assets at different cost will depend on the method of finance. Consistency. Interest is treated differently from period to period. At some point they'll be treated as an expense, at some point they are treated as an asset, so consistency is not there. Next, it distorts your reported profit. Sometimes profit is high because of lower interest, sometimes profit is low because of higher interest. Now, scope of IAS 23. IAS 23 is applied to account for all your borrowing cost. It requires that eligible borrowing cost that incurs in relation to your development of qualifying asset will be recognized as part of the cost of that asset. This is the main idea. So if you're taking a loan, let's say, for developing a qualifying asset, then any interest on that loan you will take as a cost of an asset, not as an expense under P&L. So what is borrowing cost? It is interest as well as any other cost incurred by that entity in connection with the borrowing of the fund. What is qualifying asset? Any asset that takes a long period of time to get ready for its use. It does not apply on a mandatory basis to qualifying assets that are measured at fair value. For example, under IAS 41. And entities, however, may choose to apply to these assets. They may choose, but it's not mandatory. Now, the definitions of borrowing cost. So this falls within the definition of borrowing cost. First is your interest expense. Your interest expense that are calculated using effective interest method according to IFRS 9, which may include amortization of discounts or premiums relating to borrowing or any directly attributable cost relating to borrowing. So in your borrowing cost, this comes there. The interest expense relating to this. Next, interest expense relating to your lease liability in IFRS 16 will also come under borrowing cost. So one is interest expense for your IFRS 9, other one interest expense for lease liability. Then any exchange difference that arises from foreign currency borrowing, to the extent that they are regarded as an adjustment to your interest expense according to IAS 21, will also be taken as a borrowing cost. And preference dividend when preference capital is classified as a debt. So these four items, remember them, they are part of a borrowing cost. Now when do you recognize the borrowing cost? Borrowing cost that relates to qualifying asset. Not all the borrowing costs are capitalized. No. Only the borrowing cost that relates to a qualifying asset must be capitalized as a part of the cost of that asset. Other than that, all other borrowing cost will go as an expense in your profit and loss. Now, in your FR exam, any borrowing cost that are recognized as an expense will be reported in the finance category in your statement of profit and loss. Now, disclosure of the capitalized cost. The notes to the financial statement should disclose amount of the borrowing cost capitalized, capitalization rate used. Now, qualifying asset. Borrowing costs that are directly attributable to acquire, construct, or produce a qualifying asset will be capitalized as a part of the cost of the asset. On left hand side, you can see examples of qualifying assets. On right hand side, you can see examples of assets which do not qualify. Qualifying assets, inventories which are taking a long period of time to bring them into saleable condition. Example, whiskey is a qualifying asset. Manufacturing plant, qualifying. Power generation facility, qualifying. Investment opportunity, qualifying. On the other hand, inventories that you are routinely manufactured or you are selling within a short period of time, they are not qualifying. Okay, for example, inventories that you are producing in a large quantity on a repetitive basis over a short period of time are not qualifying asset. Next, assets that are ready for their use or sale when you have acquired. That is also not a qualifying asset because they are not taking a long time to get ready for use. It should take a substantial period of time to bring it to use. Then, the borrowing cost eligible for capitalization. Specific borrowing, and then we have general borrowing. First, specific borrowing, very easy. This is very straightforward. Entity that borrows fund to obtain a qualifying asset. So, identification of the borrowing cost here is very straightforward. Amount capitalized is the actual borrowing cost minus any income that has been earned on the temporary investment of those borrowings. Funds that are borrowed generally. Here you have to use a capitalization rate, okay? So amount of borrowing cost eligible for capitalization, you will multiply it with a capitalization rate to the expenditure on that asset. Capitalization rate is your weighted average borrowing cost applicable to all borrowings outstanding during the period. This, remember, this is outside. It excludes your specific borrowings until such time as the asset is being funded by specific borrowing, is ready for use or sale. So the normal capitalized during a period cannot exceed the amount that you have incurred. In some circumstance, it is appropriate to include all the borrowings of parent and subsidiary when you are computing the weighted average borrowing cost. In other cases, each subsidiary might have their own weighted average borrowing cost. Now, expenditure to which this capitalization rate will apply includes payment of cash, transfer of other assets, assumption of interest-bearing liability. Expenditure will be reduced if you are making any progress payment received or any grants that has been received in connection with the asset before you apply the capitalization rate. And any average carrying amount of your asset during a period includes the borrowing cost previously capitalized. Okay, so it's normally a reasonable approximation of the expenditure to which capitalization rate is applied in that period. Now, let us do activity 1. So in activity 1, we have 3 borrowings. 7-year loan, 25-year loan, bank overdraft. We have outstanding liability, 8,000, 12,000, 4,000 here, and on this side we have the interest expense. A, you are calculate appropriate capitalization rate if all of the borrowings are used to finance the production of qualifying asset, but none relate to specific qualifying asset. Okay. B, if the 7-year loan can be specifically identified with a qualifying asset, calculate the rate which should be used on the other assets. So first this is the solution. A, let us first do A. What's happening in A? Please understand. What are we doing? First, add up all the interest. That is 1 million, 1 million, and 600,000. So we are doing that here in the numerator. 1 million, 1 million, 600,000. Then we are adding the liability 8, 12, and 4. So that's what we are doing 8, 12, and 4. Since it is general borrowing, and we are getting a rate 10.8%. Coming to B, where we are using 7-year loan. So we do not use the 7-year loan. We only use 25-year loan and bank overdraft for capitalization rate. So we'll take 1,600 in the numerator. That's what we are doing here. And here we'll take 12,000, that is 12 million, and 4 million only. We'll not take this 8 million. So capitalization rate is 10%. Now, when does capitalization commence? Very important. When does it commence? When does it cease? And when does it suspend? 3 things. So your capitalization starts when expenditure on the asset is being incurred, borrowing costs are being incurred, activities that are necessary to prepare the asset for its use has started. IAS 23 will identify which activities are relevant when determining whether to commence capitalization. Now, capitalization commences when expenditure on the asset is being incurred, borrowing costs are being incurred, and activities started. So IAS 23 identifies which activities are relevant and which are not to start your capitalization. Activities included when you physically construct the asset, technical and admin work before physical construction commences. For example, if you are obtaining planning permission, that is also an activity that is included to commence capitalization. Excluded when you are holding an asset where there is no production, no development that is taking place. For example, you have acquired a land, but you are not doing any development activity with that land. It is an excluded activity. You can't commence capitalization. Next, suspension of capitalization. Capitalization should be suspended. Suspended means temporary. Cessation is permanent. Suspended is temporary basis. During extended period in which your active development is interrupted. But capitalization is not normally suspended. Normally it is not suspended, only during this time. During a period when substantial technical and admin work is being carried out. Or when there is a temporary delay, okay, and it's a necessary part of the process for preparing the asset for its use. So for example, your capitalization continues during the extended period needed for inventories to mature or where high water levels delay the construction of a bridge. If high waters are common during the construction period in the geographic region involved. Remember, if it's normal that there will be high water during construction period in that geographic region, your capitalization will not be suspended. It will keep on running. It will continue. Because for some inventory, it's needed that water level is needed, that delay is needed for you to construct that bridge. Then capitalization will continue. It will not be suspended. Now, cessation of capitalization. When all the activities that are necessary to prepare the qualifying asset for its use are completed, capitalization will stop. An asset is normally ready for use when its physical construction is complete, even though some admin work is still there. If only minor modifications are outstanding, let's say interior decoration of a property to the purchaser or the user specification, it indicates that substantially all activities are complete, even though minor modifications are outstanding. When a construction is completed in parts, each part is usable while construction continues on the other part. Let's say construction of a business park with many buildings. Capitalization on each part will cease when substantially all the activities necessary to prepare it for the use are complete. Now example 1. So in this example, on 1st October 2001, they have obtained 2.5 million loan for 1 year. That is exclusively to finance the construction of a new assembly line in its factory. It's a qualifying loan. Interest rate is 9%. Construction commenced on 1st November 2001. You see, you have taken the loan 1st October 2001, but construction commenced on 1st November 2001 after 1 month. There was no construction between 1st December 2001 and 31st Jan. So that is for 2 months. Because employees have taken strike. So expenditure amounting to 1.2 million that have incurred on 1st November and further 1.2 million on 1st Feb. Assembly line was available for production on 31st August 2002, having a construction cost of 2.4 million and a useful life of 5 years. You are supposed to calculate the carrying amount of the asset at 30th September 2002 and total expense that will go in your profit and loss for year ended 30th September 2002. Now let us do this. So now let us take the construction cost. So the construction cost you can see here, it is 2.4 million. Okay, so we'll drop down the 3 zeros, so it would be 2400. That's what the format says, tax. Okay. Done. Now we have to do the capitalization of the borrowing cost. So for the capitalization of borrowing costs, see, first we have started the construction from 1st November, but in December and in Jan, this 2 months, there was a suspension of construction. So you have to take only for 1 month, that is from 1st November to 30th November. So when you're taking the capitalization of borrowing costs, you have to divide this into different periods. First one is only for November. So when you're taking for November, the amount that you have incurred, they have given the expenditure amounting to 1.2 was incurred on 1st November and interest was 9%. So now it will go as a note 1. Okay, what is it? That capitalization will start on 1st November when you have started the activity. So this is how you are going to calculate. Okay. So when you are doing it, it's 1.2 million or 1200 into 9% because the interest is 9% into 1 month only, which is 9. So it's 9,000. Okay, 9. Next, we have from December to Jan. So from December to Jan, there is note 2 where you have to say that capitalization is suspended because there is no active construction. So we'll not calculate anything here. It's blank. Then we'll go to Feb to August. Why Feb to August? Because in August construction completes. Okay, and the cost is 2.4 because they told a further 1.2. So with the previous 1.2 expenditure that you have incurred, another 1.2 on Feb. So from Feb to August. So it's 2.4. There will be note 3 to it where you have to write that capitalization will resume on 1st Feb and will be calculated on the total expenditure for 7 months from Feb to August. Feb, March, April, May, June, July, August. And it will cease on 31st August when your assembly line has been completed. So now it would be equal to 2.4, 2400 into 9%. You are taking it for 7 months, 126. So now here it's 130 total. Let's do the sum function. This 2 you will capitalize. So you will add here sum with the construction cost of. So this is the amount, total cost. The amount of capitalization of borrowing cost with the construction cost. So the total cost at 30th September 2002. Remember, this is a non-current asset now. What do you have to do? Do not forget depreciation. Yes, you have to depreciate now. Often students forget this depreciation when they capitalize the borrowing cost. Now it's a part of non-current asset. So when you depreciate this, how do you do it? There is a note 4 to this. What does it say? That your depreciation will be calculated on the total cost. That is construction plus capitalized interest borrowing cost. But when does your depreciation starts? From 1st August. Sorry, from August. 31st August to 30th September. Only for 1 month. Your depreciation. And useful life is 5 years. So when you do it, it is this divided by 5 only for 1 month. Because it's from August to September. 42.25. So let's round this. So it's 42. 42 is the depreciation which you have to deduct as a minus figure. Now, let's do the sum function and get the total. You deduct the depreciation and get it. Always work in whole number. Do not work. So it's 2493. This is the carrying amount. Carrying amount at 30th September 2002. Now, the expense recognized in P&L. Expense recognized in profit and loss. So first is your interest. Incurred. Remember, from your interest incurred, you have to deduct what you have capitalized. Less capitalized above. So amount of loan that you have taken is 2.5 million. 2.5. 2,500 into 9%. This is the amount, total interest. And how much did you capitalize? 135. So the amount that you have capitalized, you have to deduct here. And get the total. Using sum function, 90. So this 90 will be shown as an interest expense in finance category. Okay. And then your depreciation will go in which category? Very important in your P&L, you have to now, according to IFRS 18, now you have to know under which category your expense and income will go. So this will go in, and you have to mention it also. It will go in operating. Depreciation expense in operating category. As above, what is the depreciation? We have got, it is 42. So 42 is your depreciation. That will go in the operating category. So this is the solution for example 1, where we have added the capitalization cost with the construction cost and depreciated it only for 1 month, got the carrying amount, then we have recognized the expense, interest goes in finance category, depreciation goes in operating category. And in November 1 month, we have got the interest which we have capitalized, and December to Jan it has been suspended. That's why it's blank, and again it was resumed from Feb to August for 7 months. Now, so in the syllabus, it's under section B. First, tangible non-current asset. Even your IAS 16 was also under tangible non-current asset. The borrowing cost is an addition to that, where we have defined and compute the initial measurement of your non-current asset, including your borrowing cost, an asset that has been self-constructed. Now, compliance with IAS 23 is not mandatory for qualifying assets that are measured at fair value according to IAS 41 or mass produced inventory, that is IAS 2. Borrowing cost will include any interest expense according to IFRS 9, interest expense on lease liability, and exchange difference on your foreign currency borrowing. That's 3. Then, a qualifying asset is one which takes a long period of time to get ready for use or sale. Borrowing cost that are directly attributable to a qualifying asset has to be capitalized, and other borrowing cost will be expense. Specific cost. Okay, for specific funds, cost which are eligible for capitalization will be your actual cost of borrowing minus any income from temporary investment. For general fund, we'll apply a capitalization rate where we are going to apply a weighted average borrowing cost to the expenditure. Capitalization will start when expenditure, borrowing, or activities starts. It will suspend when there is an interruption in the development, and it will cease when all activities are complete. Now, there are no technical articles as in August 2024 relating to IAS 23. Thank you for watching, and I shall see you in the next lecture, that is IAS 20 about government grants. That also has to do with your non-current asset. So thank you.